If we can get down to the actual key level just below. Do we want it? Do we want it? Almost, almost. I think it wants it. I think it wants it. Maybe not.
Order filled.
All right, stop is gonna be 63. No, yes. Yes, 63 even. Right up there. That's our stop. And we're basically, I mean, we're looking for a really big move here. So I have a 20 point stop on that. All right, let's map this out on TradingView, y'all. Oh my god, it's a disappointing day already, honestly. But anyway, let's focus on the positive. Let's focus on the positive. 38325. Template. 3 to 1. Alright, that's how we're gonna do this. What do we have? We're in with 2 contracts per account. Let's see if we even hold here. Hold on. My stop is supposed to be 63 even. Yes, yes, those 2 ticks matter. Okay, well, we'll give this time to play out and see if it holds or not. So this is what I would want to do.
Stop filled.
I'd want to win the fucking trade. It'll start there. I'd want to win the fucking trade. Like, I would want the trade to survive my fucking stop. My stop to survive the trade. You know what I'm saying? Okay. I mean, I still want it. It's the level that I want. So we're going to hang tight for a moment. And so, all right, so this is the plan when this happens. When I have a key level and it gets hit, but it doesn't hold, then I get a little more picky about when I enter it. All right, so this is what we're gonna do. We run down, we hit, what the fuck is this? Why are my charts all over the fucking place? Okay. So our key level is about right here, but we look like we're retracing back up. Okay, so what I wanna wait now for it to either get back to the key level, and I would take it from there once it hits the level again. That's the plan.
Order filled.
Damn, I was a little premature there. Just a little bit. We're still rolling with it. All right, stop is gonna be 53.75. That's our stop. All right, boom, there we go. We just hit the key level. Okay, so we're in again, and we still have our tentative limit order there. All right, so let me work this out on TradingView and figure out what I'm doing with my life. All right. Primitive. I don't know where that word's coming from. 23.74 even. Boom, we throw a template on that bad boy for 3.1. Yeah, and this is what I want to do. No, I don't want to protect the trade. It is what it is. If my trade idea is wrong, it's just wrong. You gotta let it play out. So 3-1 template, but I know that if I'm in at the right time and I'm going in the right direction, that this move is going way further than a 3-1. Let's just be real. There's so many imbalances up at the top that need to be. I mean, this is just absolutely insane. Like we should just. It should be like a zip line, like a zip line to the top. Whatever. All right. So I want to do 50% position reduction at 3-1. Okay, so at 24.34, 24.34, I want to limit out of half of the position. And let me get rid of this one. And the runner, oh my god, I mean, I don't usually do this, but the runner finna be crazy. The runner is going to be, what do I like? What do we like? What level do I like? Where do I feel like we need to get back into? Maybe the runner goes up to the body of this candle right here. Or maybe like right here, but that would be a 4. It's a 4.68 to 1. I need a significant level that actually makes sense. I like that level, but I'm not crazy about it. I'm trying to decide here. I like London's low, and actually I think that makes a lot of sense. And that would be 25.63 even. Yeah, let's go for it. All right, there's our trade. And here is our break even. I think that's what it's going to be. That's what it's going to be. Yep. Okay, cool. Let's talk about it. All right, why are we in this trade? I'll be honest with you. I didn't think the market was going to take a hike this deep. It's pretty crazy. Here we are. So my premise was bearish, right? I was looking for a retracement to the fair value gap with the 78% retracement level sitting at 25.4650. Okay, so that's what I was looking for. We saw that in the earlier portion of the video. So we got that plus some. So it hit that level and it just kept going. Now, like, fundamentally, it's not really that insane because there were imbalances in higher time frames that were below that level that I was targeting. I was targeting literally the most shallow imbalance, but we had the daily had an imbalance sitting below that we needed to pull into. The weekly had it, so the confluence was heavy. It was there. So that's cool and everything. But anyway, we kept pushing and we got down to New York's previous low. So the way I like to prioritize how I take entries is if I have an opportunity to take a power of 4, I'm taking the power of 4 over everything, all day, every day. I'm not trying to be funny. I'm being serious. I'm taking the power of 4 over everything. That was my priority trade if we're within proximity for me to be able to take that. Now, if not, then I'm looking for a continuation trend, because that's usually what we see when the market is like on a hike reaching for these levels. So if I'm able to identify an organized continuation trend and I can see it in the higher time frame, at least the 15-minute, and I can see it really well in like the 3 and the 5, I'm going to look for a continuation trend. That's going to be my second priority entry to take. If I don't have either one of those, then I'm going to take the Libra. And the Libra is essentially looking for overbought, oversold areas in the market that have a recent significant imbalance that needs to be pulled into. So for example, if we have at the top, right, let's see on buy side liquidity, we have let's say even in the 1 minute, right, we've got a fair value gap that's created and it's been left behind and the market pushed down without going back to fill it. I'll wait for the market to become oversold. As long as it's meeting certain criteria, I will enter it and take the trade back into that imbalance. Okay, so what I ended up getting first was the opportunity to get into a power of 4, which is what we're looking at right now. So this is the power of 4 playing out New York's previous day low. That would be our significant liquidity pool. Then we've got overlapping order block, right? Congruent order block. So in this case, we would want, a bullish order block. And then we've got we have a premium Fibonacci retracement level that we're looking for to be overlapping that congruent order block. So we want a this is deeply discounted. This is so crazily deeply discounted. It's absolutely insane. Okay, so we want a key level liquidity pool that gets run and an overlapping Fibonacci premium Fibonacci retracement level with a congruent order block, right? That's the basis of the power of 4. There are other components which go into it which allow you to get a sniper-like entry, but when we're just looking at big picture market structure, price action, those are the 4 things that we're looking at. And the cool thing about the power of 4 is sometimes people hear that and they start thinking about the power of 3. So the interesting thing is it doesn't actually matter what stage the market is in. Like the market can be in accumulation, it can be in it could be in manipulation, it can be in distribution. When these signals, when they play out, when all of these things line up, you can take this trade, you can take the power of 4 when the market is at any stage. You can take it in Asia, you can take it in London. I prefer to stick with New York, but you can do that, right? Anyway, so we're in power of 4 because that's the first quality opportunity that was given here today, and the power of 4 is just always fire. And you don't have to trade it the same way that I do. You don't have to manage it the same way that I do. Like as you can see, I don't see a good spot to move my stop to. So I just have it at break even right now, and we're just gonna let it run. And I really expect the market to, we do have an imbalance. Do we? No, we do not. I expect the market to really do like a really nice big move. So even if this trade doesn't make it, we can allow the market to pull back to the key area and we can take another re-entry. And especially when the market's going to give you a nice, really big move, a lot of times you will get a pullback. You're not always going to get it the first entry. And there are ways to kind of pinpoint You know, when you can take these trades, when it's more likely for you to get your 3-to-1, but that's like that's a trading course right there. Is what that is. As a whole trading course. All right, so let's let this run. Let's let this play out. Just trying to stay positive today. Keep a positive, you know, mental state. And you know, I've been making a lot of mistakes lately that I just been like really beating myself up for, and I'm just trying to give myself some grace here. You know what I mean? You know what I mean? You know what I mean? I will tell you though, no matter what happens in this trade, I know that I followed my rules. I know that
Order filled.
I've done everything that I needed to do, that I could do, blah 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 blah, whatever. No mistakes have been made in this trade right now. So I am gonna go ahead and put a stop right here for just the one con. And we will just continue to give the market an opportunity to continue to move up. And as our stop is at, stop was originally 20 points. And I would like to get my secondary stop at a 3-to-1, so that no matter what, I basically get out of the trade with a 3-to-1. But the thing is, if I do that, the trade's not gonna, it's not gonna run. But I'm just gonna protect it right there anyway, because the least I want to get out of a trade with is like 3-to-1. So if it does, you know, we may leave this imbalance behind, or we may continue to move up. We'll just have to see. But we do have an imbalance right here. The market, Nasdaq does not like to leave imbalances behind. In most cases, Nasdaq wants to come back, and Nasdaq wants to fill every goddamn hole. So do I think that Nasdaq will come back and fill that? I do, but that's why we're good either way, right? We're going to protect it at 3-to-1, and we're going to give it an opportunity to run up to be an absolute banger. Yes, sir. Yeah, I can tell I'm like already done. I'm like already done with life right now. My brain's already given out. 2434. Where's that? How is that not? $24.34. Okay. I think that marks our exact. Oops. Our exact 3-to-1. Let me just see here real quick. No, the 3-to-1 is 24.34. Yes, it is exactly to the dot. Okay. Perfect. All right. If this runner were to play out, I don't see how without telling my stop is, but let's just say miracles occur. and we run it up. If that were to occur, I'm not even gonna. I don't know if we're gonna get that, bro. I don't know if we're gonna get that. I'm tight. My stop is just too tight. But I'm not giving up my 3-to-1. So it is what it is. All right, let's just play devil's advocate. Let's just say it does run. It runs up. It goes crazy. Right. All right. So we would be looking at literally.
Stop filled.
All right, there goes our dreams. That's it. All right, so I'm sure the market continues to go absolutely bonkers, but I think that's going to be it for the day. That's how we want it. That's how we like it. Nice and clean. Nice and pristine. All right, so one more time, let's just go over this, okay? So today is the 15th. This is the New York session. right now it's 10:57. Yeah, so it's 10:57, and let's just go over what happened in the market. So if you're like, why did you get in that trade? How did you whatever? Let's just break it down real quick. All right, so we're looking at the 15-minute, okay? I'm not going to lie to you. Top Step X got me feeling spoiled. That user experience is so smooth. Like, I'm gonna have to, I don't know, see what I can modify on Tradovate to make me like it more. All right, so basically, all right, the trade analysis goes back, right? So if we're looking at 15-minute, this is what's happening today. But if we go back and we look at this area right here, right? What we see is that market moves up, right? Pretty bullish, nice and uniform move up there. Okay, cool. Market makes a high. Now, I'm not going to show you a bunch of different charts, but just know that right here, let me backtrack. I'm going too fast. Okay. Market moves up. Okay. Follow me. Market moves up. Okay. We get this high right here. Okay. So we know that we've got an imbalance that the market will want to come back and fill. Okay. And I'm going to typically be looking for a 78% retracement. Okay. So if we run it, right, from this candle's low to this candle's high, we have a fair value gap in the middle, and down about right here, about right there, we'll have like a 78% retracement. We're just eyeballing it, okay? All right, so the market comes down and it fills that imbalance. And then when the market moves down, right, follow me, okay? When the market's moving down from here to here, okay, we create this imbalance that exists right here, okay? And I'll map this one out. Shapes, rectangle, boom, boom. Okay. So the market, sorry, every time you click the screen, you get the freaking option to get in. Okay, so the market creates this imbalance. So when we move down here, the market now has a reason to go up to fill this imbalance. Me personally, when I see a fair value gap, that's great. That's cool that it's there. I kind of, I don't care about this actual area itself. I'll be honest, I don't. The reason why is because Nasdaq rarely stops there, right? You can see in this example, Nasdaq goes up and blows right through the whole thing. But let me show you what Nasdaq does respect. Oops, hold on, we got to go in the opposite direction because my God, Tradovate's freaking fib is upside down. Ugh. Okay. Go from here. Just know that if you were on TradingView, you would do this the opposite way. You would run your fib from here to here so you can get the pullback. Okay, just know that. But on Tradovate, it's flipped. Okay. Follow me. Okay. All right. So this right here marks about the 78% retracement level for the imbalance that we have marked out here. Where does and the market Nasdaq will even run that level. Okay. It will, like, almost consistently. So what do we see here? The market pulls down to here and we move back up. We fill this imbalance to the 78% level. I mean, we fill it entirely, right? We go all the way up here. Great. Okay. I'm taking you through how I got to the point where I decided I was bearish today at all. Okay. All right. So we filled that. Now, once the market gets up here, right, you can see that we've created an imbalance down here. Once we get here, this high right here, we also have SMT, okay? So I'm not going to go into that super deeply, okay? Just know that ES, the S&P, was experienced manipulation and ran liquidity, and Nasdaq did not. Then we had the Asia London session, and we respected this high right here. Okay, so we respected this high right here, and we had this imbalance that needed to be pulled back into. Keep in mind, when I did a top-down analysis, there were deeper, like lower than this level, there were deeper imbalances that needed to be filled on the daily, the weekly. It was stacked. It was clear. It was very clear. It was clear as day. We were going to move down. Okay. So I wanted to target the most shallow retracement that I believed strongly that we would get. Okay. So I'm going to run the fib on this imbalance right here. And remember, it's Tradovate, so I got to run it backwards. All right. So that would give me, I'm just eyeballing this, right? But roughly a 78% retracement into that would have given me this level roughly right here. So London, Asia, I knew that fast forward going into New York, I would be looking for a short, okay? So targeting this area right here. So the market went up. It gave the opportunity for a short, but unfortunately it did it in pre-market, and I probably should start, but I don't trade in pre-market. I'm doing other things in pre-market. I'm like charting and I'm getting ready for the actual New York session. So in pre-market, it gave a beautiful entry. Unfortunately, it happened in pre-market, so I did not catch it. The market moved down. We ran through this level. And again, keep in mind that we had other higher time frames that needed their imbalances to be filled as well. So sell side liquidity was there. So the market ran all the way down, and then what we ended up getting was a tap into New York's previous day low, and when we ran that level, so we hit that liquidity pool, and we also hit the low, Asia's low that was made on 1014. Okay, so we hit two previous day low liquidity pools for two different sessions. Okay, and when we ran through it really hard. So I took the first entry, and then market went through that stop. Not really that surprising, right? Okay, waited a moment, let the market pull back up to the key area, and then got in the trade again. Okay, so that's how we ended up in that trade. So then I'm always looking for a minimum of a 3-to-1. So the market pulled back into the key area. We entered, we had a 20-point stop. I set it for a 3-to-1 to get out of 50% of the position. And then we left a runner on because I do believe that I believed that the market was going to do just like a crazy move up to the top. It doesn't always happen the first time. It doesn't always happen in one, fail sweep. So that's okay. We got out of it with both contracts, 3-to-1. So mission accomplished, not mad at all. Okay, so that is literally the complete breakdown of what my premise was at the start of the day, why I got in the trade, how I entered it, how I managed it, what I was looking to get out of it, etc., etc. Cool. So I hope, I don't always break it down like at the end of the trade, right? So I hope that that's at least a little bit helpful for you. So basically all you really need to know is that to get to that premise, I did a top-down analysis. I really focused very heavily though on the 1 hour and the 15, right? 1 hour and 15 for market structure and to give me my external bias. And then I want to get inside of the 1 minute, 3 minute, and 5 minute to actually look for entries. And to find congruency that matches up with what's going on with the higher time frames. But essentially I'm using those lower time frames to find a sniper-like entry. And my favorite time frame to use for a sniper-like entry is definitely going to be the 1 minute. And when you can get the 1 minute to line up really well with the 3 and the 5, you're in there, right? So you get an oversold stochastic on the 1 minute. You get the 1 minute candles, pushing outside of the Bollinger Band. You can use little confirmations like that. And so for me, that's how I get like a sniper like entry. I personally, I'm not yet a believer that you can just use price action to get entries that are that tight. I think you need other confluence to be able to get an entry that's that tight. And using the 1 minute, and especially in conjunction with like the 3 and the 5, you can find entries where sometimes you can have a stop as small as 5 points. And for some people who are even better, more experienced, and even a better trader than me, I've seen people get in with like a friggin' 2 point stop and run it. So anyway, so that is the breakdown for the trade. And then that's going to be it for today. So I'm going to try to be a good trader, good disciplined trader today. And I'm going to go right into my trading journal, and I'm going to journal what happened today, and I'm going to study the trades, see what I could have done better, see where I made any mistakes, et cetera, et cetera. I'll collect that data, and I'll do that all throughout the week. And then on the weekend, I'll do a deep dive on that, on the information that I've collected this week, and make a determination as to whether there's any modifications that are needed to my my power of 4 strategy here, or anything else. The Libra, I'll talk about that strategy later when I have an opportunity to actually take it on cam. And and I'll be evaluating my continuation trend strategy as well. Okay. So that's pretty much it for today. Cool. So I hope you got some value out of this. I hope this was helpful. And again, if you want to go back and look at this trade and just run yourself through it on your own, this is 10:15 New York session, and this entry was at 10:42 Eastern time. Yeah. Okay. I just make sure I'm not going by Mountain Standard Time. It's only 8 here though. So yeah. Okay. And it looks like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. All right, so it looks like that whole trade took less than like 15 minutes. All right, cool. So I will see you guys tomorrow for New York as well. And just remember, like, you're getting active in the market, just follow your rules. Follow your rules, follow your rules, follow your rules. When you don't do it, the market is always going to remind you. It's going to bitch slap you back into reality. There's no point in going outside of your rules. Don't do it. Don't do it. You can paper trade, you can experiment like that. When you're in the live market, you have real skin in the game. Trade your actual rules. Leave all the other stuff for when you're studying, for when you're back testing. Okay? There is real pain associated with trading like shit. So don't do it. The things that you've already learned not to do, just don't do it. Just stop doing it. Stop doing it right now. Don't do it. You already know it's not worth it. I know it works out sometimes, but it doesn't work out more than it doesn't. So stop doing it. Be a disciplined trader. Stick to your rule set. Follow your rules. If you need to make changes, then you do it. You do it because it's evidence-based, not because you're being whimsical, not because you just feel like it, not because you're emotional. You follow your rules every single day. You can paper trade the other bullshit, and when it's actually worth taking it to the real live market with actual skin in the game, that's when you do that. But until you have the evidence there, until you have that data, you trade your rule set that is actually an evidence-based strategy that you know has a good win rate, that you're good at executing, that you've practiced, you've back tested, etc., etc. Okay? Follow your rules. Good risk management. Keep it tight. Do not jump in trades with 1 million contracts. You don't need to make $1 million in one trade. You don't need to make $1 million in one day. This is a compounding game, okay? Remember that. Remember that. All right, I will see you guys next time.